So I saw a lady earlier. She's clearly in her third trimester of pregnancy. She looks ready to drop. I'm not going to point her out. But I figure this afternoon is like a pregnancy. So you're just about to go into the second trimester now. And in this second trimester, we've got cross-border payments, peer-to-peer and alternative funding, and something called RegTech, which until recently I thought was... I thought it was something about my number plate. I had no idea it was regulation technology. Anyway, when it comes to cross-border payments, it's a bit of a subject close to my heart. 7 years ago, I hitched through Ethiopia into a place called Somaliland, and via Smithfield's Market in London, 2 big bags of money and a mobile phone. It was my first experience of fintech. It was awesome. Now, these 3 gentlemen look like they're ready to rock. So the first person I'm going to hand it over to is the gentleman in the far right, a guy called Alec Mitsood from a company called Ixaris.
Okay, good afternoon, everyone. A bit about the company before I go into the rest of the deck. Ixaris has been building B2B payment solutions for a number of large corporates over the past few years. We're at a sort of £7 million run rate of revenue, processing just over £1 billion a year of actually monetary value. And we are really trying to get adoption across the B2B payments value chain, in particular driven by cross-border payments. So B2B payments in general is really ripe for disruption. This accounts for $290 billion of revenue, not money flow, revenue for the banks. And mostly it is today done by the banks, typically the tier 1 banks around the world. There is a real time for disruption happening, really fueled by 2 things. One, the change in regulation, particularly the move towards opening up payments, and the challenge with some of the business models like interchange. And the second thing is big improvements in infrastructure. Typically, the faster payments. Of course, in the future, there'll be things like blockchain and cryptocurrencies. But these are real changes that open up the opportunity to disrupt or at least transform cross-border B2B payment flows. It's an attractive target because although cross-border payments account for 20% of all payment flows, of all B2B payment flows, they actually account for 40% of the revenues made by the banks. So it's a very attractive thing to go after. Now, the challenge is, if it's going to be disrupted, it can't be a one-size-fits-all. A business sending money from West Africa into Europe has very different challenges and different ways of doing it from a business in Brazil sending money to the US. So you cannot take a one-size-fits-all. There are also very, very big distinctions between in different verticals. Doing B2B payments in insurance is very different from doing B2B payments in the travel industry. So you can't do one size fits all. And the way we go about it is we create applications that are specific to use cases or to specific verticals. However, if you really want to get scale, you want to deal with the large players like Amadeus, as I mentioned earlier, or AirPlus. And to do that, you need to tweak your stuff. And we've got toolkits to do that today. And we use third-party contractors to build exactly what works for their business model. But another form of distribution is to really have anybody be able to do it. And that's what we're doing next. We're really taking our tools and publishing them so everybody can build B2B payment solutions that really cover the globe. So the first thing I would say is this an API? The world does not need any more payment APIs. There are plenty, there are many more coming, especially with PSD2, will be awash with APIs. What is needed is a way to put all those different third-party APIs together into a coherent whole. And that's what we're doing. It's really a solution we're calling the Open Payment Cloud. It's the only publicly accessible, openly accessible, and bank-independent network for B2B payments. The full tools to build the life cycle, openly extensible. If you have an API, you've heard some pitchers have APIs here, they can plug into the open payments ecosystem. And then finally, anyone can take all that and create a virtual private payment cloud for themselves. So that's the concept which we are bringing to market. So the way of operating is pretty normal in open ecosystems. Developers create stuff. Either the developers themselves or third parties or the banks, whoever, would take those applications that are published and can launch them. Of course, they need banking services behind them. And service providers, banks, other fintech companies, currency exchange providers can also plug into the ecosystem to provide their services. Altogether, that makes for much more choice and happier customers. So I'm going to open the bonnet very briefly to show how this thing works. Well, it starts with payment models, which really are things that collect together these different payment APIs, like Lego blocks, put together in a single framework. Each of these components is called a payload, by the way, and it consumes a third-party external API. Once you've got a payment model in place, you can use the toolkits to create user experiences, publish new APIs, and build connectivity into the service providers if they don't exist already. And that's your unique application you've built. Once you've built it, of course, you want to run it in your own virtual private payment cloud and connect it to any of the service providers that are needed to run your application. So that's the concept in brief. I want to highlight this concept of virtual private payments cloud. This is one way, if you wanted to create your own ecosystem with your own developers, your own application store, and ultimately your own community of users, you can run this virtually on top of the open payments cloud that is available, and which runs on all the sort of cloud capabilities out there on a sea of microservices. And so how are we driving adoption? This is the technology behind this was financed by the EU to really promote this open payments capability. We ran a hackathon last weekend. That's our very first touch with people out there in terms of this open payments platform. We've just launched a competition today for the next couple of months, and we're awarding engineering resource as well as the ability to take those products that come up to market. And we're launching a public beta for anybody to take part in June. We've worked in the past couple of years with a variety of partners, financial institutions, one of the card schemes, Startup Bootcamp to really have the outreach into the developer community. And now we are looking for investors and we're looking for more ecosystem partners. So talk to us. Thank you.
Thank you, Alex. That was awesome. Now we go over to Peter Keegan of Apex Fintech. 2 X's, right?
2 X's.
Your time starts now, sir.
Well, first of all, thank you for that introduction. My name is Peter Keenan. I'm the CEO of Apex. We are an e-commerce platform dedicated to helping our customers, retailers, sell more cross-border at lower cost. But before I jump into my presentation, I just want a quick show of hands. How many people in the room have shopped online in the last 12 months? Can I just get a show of hands? One of the judges, pretty much everybody else. Sorry, Brett was busy scoring, I think. And then secondly, how many of you have been frustrated by the payments experience that you've had online? Quick show of hands. Yeah, I'd say about half the room. So that's what I'm going to talk about here. So Apex is dedicated to solving consumer-to-business payments in a cross-border world. Now, we live in a world where there's lots of changes happening. We all have smartphones, we all have connectivity, and we increasingly live in a real-time environment where information flow is real-time. We want things to happen instantly, and we get massively frustrated when things don't happen instantly. I thought this summarized the changes that we're all experiencing very well. Hopefully you've heard of Maslow's hierarchy of needs. If you have teenage daughters like I do, if you don't have Wi-Fi, and if you don't have battery, you're in deep trouble. So clearly that, I think, signifies the change that's happening pretty much, certainly in the developing market and in the Western world as well. So those forces are driving a very significant change in the way we shop. This is some Accenture data looking at how e-commerce has grown since 2014 and a forecast to 2020. But what is really significant is the red bar, which is the cross-border volume, forecast to be $1 trillion by 2020. It's an enormous market. And what I'll put to you today is the payments industry has not kept up with what the core clients are looking for in that marketplace. Now, back when I used to run Dixons and Currys here in the UK, we had quite a sizable, still have quite a sizable e-commerce business. This is the way we looked at conversion in the funnel. Right at the top, you get people looking at your website. They go through various stages on the journey. They get to payments, and oh dear, you lose a lot of customers. And over the years, despite 25 years of the internet, it still is a massive issue today. If I put this data up, this is some of our existing clients today. We've aggregated the data and, of course, anonymized it. The key stat here is this is looking at just different countries. This is real data, real customers looking at their conversion rate online in a cross-border world. And the best data, the best number here you'll see is 1.13%. So imagine you're a shopkeeper today and 100 people come into your shop and only one go out having purchased. You would see that as a real failure. That is what is happening in the cross-border world today. We see that as a massive opportunity in a $1 trillion market. It's a 99% failure rate. We think there's clearly payments and sorting out payments has a massive role to play. So why is that an issue? What's causing the problem? Most retailers have grown up with deep integrations, deep technical integrations with their acquirer, and have a one-to-one or a one-to-two relationship. Our view is you need one-to-many. You need 5 or 10 PSPs or acquirers who are deep specialists in each of the regions that you operate in. And that's what we bring. We have a platform that's already connected across 6 regions, 30 acquirers and PSPs. That is what we bring to the market. Now, it's very difficult for retailers to connect directly because of the technical complications, the cost, and of course the reconciliation and reporting. We do all of that for our retail clients. So we have Apex Analytics platform that will provide one report across 10 acquirers if the retailer chooses 10 acquirers. So that feeds into their reconciliation process. But the most important bit of our platform is what we're calling the payment optimizer. And this is where it gets really interesting. Here, how do you decide where to route the transaction, which acquirer? Our platform will dynamically, in real time, route individual transactions to a specific acquirer based on what is the best result that's going to be achieved for the merchant and the ultimate shopper or customer. That is a secret sauce in what we do. The ultimate end game here is artificial intelligence. We will be able to take the learnings from what happened previously into what we do going forward to make sure that the platform routes and learns to the optimum end acquirer. This is our vision for how payments will improve, particularly in the cross-border space. Thank you very much.
Thank you, Peter. It's an excellent presentation. I'm now going to pass you over seamlessly to James Morton from a company called, I can't say anything now, a company called MangoPay.
Thank you very much.
The time starts now, sir.
Thank you. Well, Peter, that was a very good pitch, and I think we may need to speak afterwards. But my name is James Morton, and I am the UK and Netherlands country head for MangoPay. MangoPay is a payments API, which we've kind of discussed already, but what I want to talk today about is the context that MangoPay works in for cross-border, but ultimately what I want to talk about is why MangoPay exists, because that's ultimately why we're here. So, the tri-party payment puzzle, and I don't want to trademark this, but this is something that how I describe the business and the kind of the solution that we solve. So, if anyone here runs or operates or works for a marketplace, crowdfunding platform, P2P, sharing economy platform, or even some more niche fintech companies that do savings, whatever. If you work any one of those, you may have some context around what the tri-party payment puzzle is. But for those who don't, simply put, it's where you have a middleman and a buyer and a seller, or an investor and an SPV, or a lender and a borrower. And historically, that has been fudged, and people have tried to build a platform whereby they've relied on multiple acquirers or multiple PSPs, and they've taken the funds into their own acquiring account and tried to solve the payout problem themselves. But given the way online commerce is moving, given the way the financial services is moving, we're seeing a dynamic whereby lots of businesses are actually creating platforms that have this flow. So we look at the growth of crowdfunding in the UK and Europe. We look at the growth of P2Ps, we look at the growth of Amazon, and then Uber and Deliveroo and everything else. And ultimately, they all sit under the same umbrella or the same flow. And really, that's what MangoPay looks to solve. So, the solution. Now, I could talk all day about what it is that we do and how we work, but what I want to focus on is some of the key factors, especially given that this is a cross-border discussion, on how we work. So again, given the nature of the way financial services and online commerce is going, everyone's looking at cross-border. And with cross-border, you look at multiple currencies. So we support about, depends on the day of the week, but between 12 and 14 different currencies. We've transacted in over 90 countries, and we contract with about 24 different countries within the EU. And for us, we provide the mechanism for our clients to manage the cross-border and multi-currency themselves. So we don't have inside our own API the ability to transact and do the foreign exchange for them, but we give them the ability to go out to market, find the broker that they want, and then ultimately get the best spot price they can. I suppose the next point really is regulation. Now, historically, regulation, especially with regards to online commerce, especially marketplaces, was a little bit gray. Whereas now you have things like PSD2 coming into play, whereby if you're a marketplace now, you cannot be liable for the funds that you're taking onto your own merchant acquiring account. You have to either be regulated to do it or outsource it. So again, having an e-money issuer license that like we do, and also a payment institution license, enables us to do a lot of the regulatory heavy lifting for our clients. I suppose the next one, again, this kind of harks back to the cross-border point, is that it's all well and good being able to offer multiple currencies and work in lots of different countries, but it's a little bit more nuanced than that. I mean, if you look at the Dutch market, for example, a lot of online commerce is not done through the existing payment rails that you'd know here in the UK, like Visa and MasterCard and PayPal. It's done through Ideal. I mean, 80% plus are done through Ideal in the Netherlands. It's the same with the German market. I mean, you're looking at Zofort and everything else. And again, also what's very important is the automation. Now, ultimately, if you can't automate this process, it's impossible to scale. So what you need is something that, like a single API to automate that entire process. And again, that's something that we do. Now, conscious of the time, so I don't want to kind of hark on too much about this, but I mean, security, having a single contract, not having to go to multiple vendors, all that having it under one single API will save you a lot of time. And obviously being developer friendly, ultimately it's a technology product. So therefore, being developer friendly means that your developers can integrate it seamlessly within a week or two. But also a very important point is future-proofing. It's all well and good building a product for now, but we want to build a product for the future. Rather than looking and focusing on what's happening here and now, we want to look at things like PSD2, we want to look at things like the IFISA, we want to look at a whole different remit of things that cover all of the industry verticals that we work across. So, why MangoPay? Very briefly, you may or may not have heard of a company called Litchi. And Litchi is our sister company. And Litchi, in France they call it a cagnotte, but in English it's a money pot. And it's now Europe's largest money pot platform. And when we built Litchi, we couldn't find a solution for this tri-party puzzle. So, like any good entrepreneur, our CEO just thought, well, let's build it. So we ended up building a product that, after about 3 or 4 years, Litchi, we realized, wasn't actually the ultimate value. The ultimate value was in the infrastructure that we'd built by automating this tri-party puzzle. So now, where are we? So we're 70 plus members, team members, sorry. We're spread across 5 different countries. We have 1,600 clients, as you may imagine, in the online marketplace space, crowdfunding, P2P, and fintechs. And we've recently been acquired, well, I say recently, back in September 2015, by Credit Mutuel Archaea. Thank you very much.
Thank you, James. That was awesome, and I think all 3 were awesome. Over to you guys, I suppose, one each.
Yeah, a question for Ixaris. So I understand in fact I have a lot of questions, but I'll choose one. So you're like a platform, but what exactly is your primary use case and where do you think you're going to make money?
Sure. Well, we make money today by orchestrating payments for, if I take the travel industry, for example, and you take Amadeus, which is one of our customers, they enable travel agents around the world. They have access to hundreds of thousands of travel agents to make payments. In addition to finding and booking a flight or a hotel room, the travel agent can also facilitate the payment to that supplier. That runs on our platform. Right? If I take something like AirPlus, which is one of Europe's largest commercial issuers, they are issuing virtual cards for corporates to make payments, typically travel and expenses, and also to pay their suppliers. Now, they are, they need to have greater connectivity into the existing networks and existing capabilities that are emerging. Not just the schemes Visa and MasterCard, but also new networks, as PSD2 will really create a de facto network across Europe. And to orchestrate those different payments in order to keep B2B cross-border payments ahead of what competition are providing, our platform provides the capability to build all that connectivity and the orchestration of transactions between them. Now, we are building those solutions ourselves today. The difference with what we're making here is the jump is to publishing those tools, so it's not just us being the bottleneck. This is really a model which is, the idea is to adopt it absolutely widely. That's the primary proposition here.
One question each, I'm afraid. So, any questions for Mango Pay or Access?
Yes, it's a question that I have difficulty with actually both of your pitches in terms of how you actually monetize the platform, right? So I'd like to ask you the same question: who actually pays what, and how is it structured?
Yeah, so the vision of how we monetize the platform is very simple. We want to turn it away from traditional pence per click. So it doesn't matter what the performance of the underlying PSP or acquirer is, into a model where we, in the upside we bring to the merchant, we share in that upside. So, for example, in our payment optimizer, we optimize 90% of the transactions. We choose not to optimize 10% of the transactions, so we have a reference point to be able to say, here is the value we bring to you, Mr. Merchant, across these various markets, and the deals we have in place, we share in that upside. So we see that as a key part of this in two ways. One, in selling it into the retail space, we're the first, as far as I'm aware, the first people to be able to say, actually, we're putting our faith in our platform in the fact that the value comes from the value we bring you. But secondly, with the data that we're able to see, we're able to prove with real data what that value is. And I think that's groundbreaking.
Thank you. And the final question to James and Mango Pay, please.
So, same question, how do you make money?
Very simple. So we provide the API without any initial cost, but we just take a margin on the percentage of the payment that we take in. So depending on the payment type, whether it be a Visa or MasterCard transaction, we will work with our PSP partner and we'll work on a percentage there. But then also, we accept lots of other payment methods that a traditional PSP won't do. So for example, we'll accept bank transfers. And so on the bank transfers, bearing in mind the liability that we're taking on holding the money ourselves on behalf of the third party and all the KYC that we do around the payment and the users on the platform, we will charge a percentage fee based on that as well. So it's on a use case, basically.
How does that sound, judges? Sound good? Are we ready to vote, everyone? There'll be 10 seconds coming up on the screen. Is it going to be Xaris, Apex or Mango Pay? You have 10 seconds to vote, starting now. That's trimester. I'd like to thank Alex, Peter and James for some awesome presentations. Good luck. The results will be in around 5 o'clock, and I wish you all well. We'll move on to the next one. Thank you.